Hello, everyone. My name is Lachlann. I write for Monday Morning, and I'm also an analyst on Exponential Stock Investor. Now, today we have yet another buy now, pay later hype stock that has gone flying up the charts. Now, the company is called Credit Intelligence. The ticker code is CI1. And today I'll be making some broad comments about the buy now, pay later sector. And I'll also be looking at the financials and the charts for this particular company. So hopefully you stick around for those comments. They might catch you off guard or they might upset you, but regardless, I hope you stick around. So let's dive straight in. So this is the announcement that really got Credit Intelligence moving in a big way. 23rd of February, and they've launched a buy now, pay later product called Yozo Pay. I'll get to my thoughts on that name in just a bit. But the interesting thing is that it leverages AI, an AI engine. Now, so that's sort of building on Credit Intelligence's existing sort of business architecture, right? So they have sort of pivoted to buy now, pay later late in the piece, but they're specifically going after the small to medium enterprise market. And I think this is actually very similar to a specific Fintech in China, which is absolutely massive. Now, I'll get to that in just a bit, but for now, you can read this announcement. It's an interesting read. It sort of outlines what the particular features are, and let's see how that impacted the CI1 chart. So, as you can see, it started moving as early as the 16th. There's a big vertical bar on the 17th of December. And then it went absolutely nuts. It went all the way to 13 cents there from a low of 2.5 cents. So that's a huge move. And it sort of is reflective of what we're seeing quite a bit in the small cap and specifically the buy now, pay later part of the market. So let's just take a look at some of the metrics surrounding CI1. So they have a market cap of 95 million at the moment, and they've actually got a price to earnings, so they're actually profitable. I'll get to the financials in a bit, but they've got a price to revenue ratio of 6, which is actually not all that bad by buy now, pay later standards. So let's take a look at their most recent half-year report. So this came out today when I recorded this on the 24th. So you can actually see they've got revenue of 7.3 million. And that is up 21%. And yeah, they're actually profitable with 1.5 million there. So that's actually not too bad by buy now, pay later standards. But that's because they weren't sort of operating in the traditional buy now, pay later model until very recently. But you can sort of get a sense for the excitement around this company if they can get it to work, right? But what I also want to do is, first off, I mean, I'm not denigrating the platform, but Yozo to me is not the best name for a product. And it, to me, sort of signals that the buy now, pay later sector is starting to get a bit saturated on the ASX. And that's just sort of basing it purely off the name. And I know there are a lot of new entrants to this market, but it's possible we might even be approaching a situation where competition risk will finally kick in for these companies. And I'd also just say at the start here is that when Matt Coman said, it looks like credit to me, the head of the CBA, the Commonwealth Bank of Australia, he said, it looks like credit to me in remarks on buy now, pay later. I just think that it's possible a regulatory intervention might come in down the track should these buy now, pay laters successfully chip away at the big four's market share when it comes to credit or credit-like products. So that's a sort of overarching point. And I just wanted to draw your attention to something we've been talking about in Monday Morning quite regularly, which is what's happening in the fintech space in China. right? So there's this company out there called Ant Financial. Now, Ant Financial is this absolutely mammoth sort of arm of Alibaba, which is a huge e-commerce player, and its leader is a guy called Jack Ma. Now, he's facing difficulties. I won't get into that too much, but the idea with Ant Financial is that they run on a 3-1-1 model, which is that they have an immense amount of data available on customers and their purchases and I guess their credit worthiness in a broad sense. And they're actually able to process loans in the space of 3 minutes and 2 seconds. So 3 minutes to fill out the application, 1 second to get approval, and 1 second for the money to actually hit your account, which is actually wild when you think about it. So going back to credit intelligence here, the fact that they're using AI to determine credit worthiness or credit-like worthiness, it sort of speaks to the potential of the company. And at the same time, I think it also speaks to the potential for a regulatory intervention because there was a regulatory intervention in China. Now, I'm not saying that's definitely going to happen in Australia, but I do have this broader sense that there could be a larger thing afoot in the buy now, pay later space in the coming years. So while it's fantastic to see these new companies rise up the charts, I just urge a word of caution about your expectations in this sector and the regulatory risk. That's a common comment, but it's just something to be aware of down the track. And that is about it for me today. I've run you through the financials, and I just draw your attention at the end here to a report I always plug, but it's a great report. It's 3 fintechs. They're all small caps. And it's a report that's been out for a little while, but the companies profiled in that report are still quite small. So if this interests you, by all means, download that report. You can get that in the video description below. And I hope you have a safe week. And you can also read the article. One last thing, you can also read the article that I wrote about CI1 in the video description below. So be sure to check those 2 things out. Have a safe week, and I'll talk to you soon. Thank you.